What's up, family? Welcome back to yet another episode of the School of Sniper Entries. So today I'll be educating you guys on entries that I took on my live funded account with the Forex Funder that I've been busy trading. In fact, I just got another withdrawal from them this week, so I'm very excited to also show you that. But the main emphasis of this video is going to be educating you guys to get unmitigated zones like your supply and demand that the market has left off over a long time, pulled back with to it via what we call deep pullback. So this entries I did is actually show them on our Instagram story at prophetic_forex. So if you guys are not following us there, make sure to follow us to catch up on what we do on a daily basis, which trades we take, and I show them there. Please do make sure you follow us there. So I'm gonna dive onto the chart right now, and I'm gonna show you I'm gonna break it down, articulate it as best. So if you're a beginner, intermediate, or advanced trader, this video definitely is created and meant for you. So let's watch till the end and make sure you can comment down below on the value you have gained. God bless you. Okay, family, so we're gonna start on gold. Now gold was absolutely beautiful over here. I'm gonna go to the H1 time frame. Just want to jump straight into this. Let me just get rid of this over here. But yeah, I want to show you exactly what was happening here, where we're talking about a deep pullback, right? I do really talk about different types of pullbacks within our mentorship advanced trading course, and I'm going to talk about them even right now. I feel like it's valuable information that I can also share over here without sharing too much, right? So we have different types of pullbacks. We have a small pullback, a medium pullback, and a deep pullback. Now a deep pullback, it's when basically the market has left off different types of medium pullbacks. It breaks them, taking its liquidity, and then therefore going to an unmitigated supply or demand. In this case, we're talking about a demand, and I just want to show you here. This price was at 2018, and I just want to show you where it took off over there. Look at this. I just want to show you now. If we take that demand, you can clearly see that the market never came back to this demand over here. Okay, let me just get rid of other drawings here that we can have a clear one. Okay, so you can see this demand was absolutely beautiful, but look at this. The market took off without ever mitigating it. Let's just take my drawing tool. As you can see, it only filled in this one over here, and the market went up, and we're having higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And of course, yeah, that was the actual trend that you were seeing, but the market left off this bit here. So I like trading off this type of demand areas, because I know for sure that the market is going to want to pull back to them and really run, or rather just run with the market. And that's exactly what the market did over here. I just want to show you the risk to reward ratio. One was 1:7. Okay, so as you can see, this was an absolutely beautiful trade that we took over here. I did have a very tight stop loss. The market played around this 2018, between 2018 and 2015 zone of demand areas, and I really did have a very tight stop loss. But nevertheless, I went in here. Many of you did see I went in 100 lots on this. I'm not sure if this is showing properly with the light that it needs to, but anyway, you guys are focusing on the chart. But yeah, nevertheless, as you can see here, we took this trade because we had this confluence. So I'm just gonna draw it up for you over here. I do like to illustrate. So basically, you want a zone that was left off, that was neglected, so we call it unmitigated. The market takes off, okay, you know, using other zones, and then suddenly it breaks the zone. So it takes all the liquidity, fills in that, and then of course creates higher highs. In this case, I was not greedy. I just took it on the last lower high when I was doing that. So the zone over here, it's exactly like this, and the setup would be that the market fills in a demand, okay, and that's how it looks. And of course the liquidity will be there, so you'd be breaking that whole liquidity that the market created while it was creating those new higher highs. So, and a setup or a demand that's unmitigated, pay attention to it. Don't forget it, because once the market hits that zone, definitely it's gonna want to create new higher highs. I'm not saying that gold is gonna go all the way up, but definitely if you want to spot this kind of setups, mostly in the market, they are quite very beautiful. Okay, I want to go to Dex 30. Dex 30, I want to teach you a new lesson over there. It's called room to the left. Okay, I'm on the 1 hour already. Okay, room to the left is a concept that I also teach within the mentorship group, and I want to also teach it here. So room to the left, so where we speak where there's literally nothing. So as you can see, the market had took this higher highs of here, took out this highs, and created new highs there. So there's room to the left. There's nothing that's going to stop the market. But now, when do I know when to sell or buy? When the market is broke the highest points of its structure. That's exactly what I'm going to be teaching you now. Okay, room to the left. I hope you take this lesson back to your chart. Okay, I'm going to go to the 15 minutes chart, and given that I noticed that the market had taken out the highest high, of course I did kind of just mark it for you guys here. We had that liquidity that the market took off, the market sold off, and as soon as I knew that it created this order block, but I just call it supply. But for those guys who are obsessed with labeling in the comment section, order block supply, one thing, doesn't matter as long as it makes you profitable, right? And I wanted to trade off, but now hindsight, you can see the market really rarely fell all the way down. But I was targeting this demand area here because we did not have a change of character as of yet. Okay, so I was targeting that demand area. The change of character is the last lower high, but of course the most important thing is that I made profit and was able to capitalize on this trade over here. So given that you have the market taking off the highest high, so that's the first thing, and the market sort of gives you an entry format. So one of them, there was an order block. The market gets to sell off, pull back. As soon as it pulled back to that, I was able to be confident, guys. This is not guesswork. This is hundreds of hours put into refining the trading system. So I don't just enter because I feel like it's going to be profitable. I've tested it over so many times. Hence, that's what I emphasize to all of my students. So if I teach you a concept, don't just take it and just try to apply it once on the live account. You gotta go back, test it forward, test it, test your psychology to be inclined and to be one with the trading method. So that subconsciously you can be well aligned, that even if you can just pick it up, how good is it? You have the stats, you have the numbers to back it up. So that's exactly what we call mechanical trading. Can only be found, guys, in our mentorship, right? I'll just put the link in the description of the video, propheticforex.com. You can just find the advanced trading course there. Amazing community, right? I'm going to be doing interviews very soon of my students, so you guys, you'll see the power there. So, but anyway, you can see the entry was right over here. Okay, and the stop loss was just above the zone. I also posted this trade, guys, on our Instagram stories. Okay, and of course it hit all the way there. After it hit, it actually pulled back, so I was kind of grateful. But then the market sold off. I never took other entries. Again, I just take few trades and then I just concentrate on tasks that I have to do for the mentorship. Okay, now let's go to Nasdaq. Okay, Nasdaq was also absolutely beautiful over here. I took sells as well, and let's just go to the 1 hour. You will see what I actually saw here. Okay, let's go. So you can clearly see here what was happening. I saw these two highs. Because these two highs, we can understand that they're liquidity, right? Okay, they're of the same level, but the market is failing to sort of break this high right here. I'm just gonna get rid of this line before it distracts some of you guys. Okay, let me just, so as you can see, we can see that the market was struggling to break this level over here, or this zone. It already took liquidity, and of course the market just fills in terms of that, but it's equal highs. I knew for sure that the market will surely use it as liquidity to break later on in the future, but I wanted to capitalize on it right at that moment. This was on Monday. So exactly what I do when I see equal highs, I wait for the market to create an impulse showing me that it's responding to that, and of course I wanted to pull back. Then that's when I pull in the trigger based on an entry format. Again, there was a supply there. Others, again, your smart money ICT guys will say OB. That's all right. We care about being profitable rather than labels. Okay, so if you go over here, you can clearly see, let me just get rid of that. You can clearly see the trade here was absolutely bang up, absolutely beautiful on the market. Okay, there was a supply over here, liquidity over here, so I do like to trade off liquidity as well when the market gets to give me such entry steps. I know for sure how much risk to use. Even when it pull back, there's a concept that we teach called the triple R. Okay, it shows us when the market is about to respect the zone, and in this case it actually did respect the zone. As you can see, it turned around exactly at that point. It was a sell limit, triggered 100 lots in, and the market flew all the way down. Now I placed my TP1 here because I was not quite sure that it was going to reach all the way here. Okay, given that this is the last higher low that I'm confident about. If the market broke this, then we're confident about sells. But okay, it's another story for another time. But as you can see, I took this entry over at this demand level over here, so that's why I took my take profit, and once it hit the market, actually just turned around, and of course it was a break even for the rest. But I was able to capitalize on all of this trade opportunity here. So of course, what you can take away from this video, family, number one is that you can look at zones that were unmitigated, look for the deep pullbacks. Number two, look for zones where you have room to the left, and of course trade off the reaction when it starts to turn around. And of course here, equal highs, once you see that the market is failing to do something, it's failing to break resistance or supply, then you use it to your advantage. Take the trade, don't be too greedy as you have just seen. So as I said, I did actually trade off the Forex Funder Live account, so make sure, shout out to those people. Of course, make sure to actually use my link in the description of the video for 10% off your purchase of an account. As you have seen, I've been showing you guys withdrawals of them. Even now I'm expecting my withdrawals, so I'm very excited for that. So definitely guys, see you on the next educational video. Hopefully this video can really now change your life, but you have to do your homework. You have to put in the work, not just by watching but by imitation of what I just did on your chart. Apply it, back test it, and see how true it is. Then you can be sure to have confidence within your live trading account. Anyway, if you enjoyed this video, make sure to subscribe, like, and also share this video with your friends and family. God bless you.